Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we're going to learn a topic which is called as the Consolidated Financial Statement. Now, this is the most important thing for the listed companies because the companies which are listed, if they have any subsidiaries like the Colgate, which is having CEO, the subsidiary of the registrant, then they need to report the data of their subsidiary associates or the joint ventures and so on and so forth. They need to report all the data, and it has been summarized into one single statement, or in the one financial statement, which is the consolidated financial statement. You can see the Colgate subsidiary of the registrant, different type of subsidiaries that which they have, and the jurisdiction in which they operate is given over here. As you can see the data right in front of us, see the subsidiary of the Colgates, and it's in around the globe, as you can see. So consolidated financial statement, is the basically the financial statement of the overall group, which represents a sum, total of the overall, you can say, sum total of its parent and all of its subsidiary. So it's like, this are all the kids of the company, and this is the head of the company. You can say that, or the parents, or the basically you can say the mother or father. So it includes three kind of the financial statements they have. The first one is the income statement. Then they have the cash flow statement, and the next is the balance sheet. Right. So this are the three sort of financial statement. Now, what is exactly the meaning of the consolidated financial statement? See, it is a very important thing. I mean, for an investor to understand, a parent company who owns a major stake in another company, the later, the another company that later is called, the subsidiary. So even if both holding and the subsidiary have separate legal entities and both record their own FS, that is the financial statements, they need to prepare a CFS, the consolidated financial statement, to help the investor to get a better understanding. Now, in this tutorial, we'll look at the meaning of the CFS, meaning in detail, and we'll try and find out how to create CFS using the IAS and GAAP. So let's learn what exactly is the CFS. See, from the name itself, the CFS, we can guess that, the financial statement, are talking basically about, here is not one company. Here we are looking at the financial statement of all the companies, and which are the subsidiaries of the parent company, right? And legally they have separate entities. So let's take a CFS example to understand this. Let's say there's a company called KG Inc., and it is an electric power supply company, and it's stock trade on a stock exchange. The KG Inc. has acquired into, let's say, KK Inc., and both of these companies have separate legal entities. Now here, KG Inc. company is the parent company, and KK Inc. is the subsidiary. So both of this company will issue their financial statements separately, but for aiding the investors and the shareholders, they would create some CFS, the consolidated financial statement, which will contain the financial statement of both of this company, both of them. Okay, and this consolidated statement will help the investor to understand the big picture of the company. Like, for example, all the expenses that are incurred by the KK Inc. company is separate from what KG Inc. Right? But in the CFS, all the expenses of both the companies, they will be recorded, and similarly, the balance sheet of the CFS will portray both of these companies in terms of the assets, liabilities, and stocks. So we'll see now how can we format the consolidated financial statement so that the investor may understand the direction of the company and its subsidiaries. So we'll look into the accounting part now. Now, how exactly is this financial statement exactly work? Now we'll understand from both the angle, from the IFRS angle and from the US GAAP angle, how exactly preparing the consolidated financial statement. Over here, it's as per the IAS 27. They're given some guidelines. So, first let's talk about where it isn't necessary for the parent company to prepare and present the CFS. So if the parent company is fully or partially owned, I'm talking about the holding company, or the parent company is fully or partially owned by the subsidiary company, then the presentation of the CFS is not required. Understand that fact. And this fact, but that is the subject to the fact that if the owners don't question the parent company for not representing the CFS. Now, if the parent or the holding company stock or the debt isn't traded in any public market, for example, like what we are talking about here is the stock exchange. Let's say the stock exchange. You can say that in that scenario, over the counter market, then it's not required for the parent company to present its consolidated financial statement. Now, if the parent company is on the brink of filing its financial statement with the SEC or the Security Commission of issuing any type of instruments in public market, then it would not be required for the parent company to present its CFS. The fourth, lastly, if any parent of this parent company, if any parent of this parent company presents its CFS according to the mandate of the IFRS, then in that scenario, it would not be necessary for the parent to present any CFS for the public issue. Now, let's understand some points regarding the US GAAP. See, if you are in USA or follow GAAP, here are a few things you should consider while preparing the CFS. Let's say if a company has majority of voting power of, let's say, around greater than 50% or more, then the CFS can be done. Yes. Now, according to the GAAP, if your business holds 20% to 50% in equity, you need to report your FS under the equity method. Remember this thing. And the reasoning behind this is that the company behind that, as a company, when you have 20 to 50% equity in another company, you can exert your own influence on them, and that's why they are asking to do or follow the equity method. Now, according to the GAAP in the CFS, the equity portion of the retained earning of the subsidiary company should be removed, and if the subsidiary is not fully owned, then the non-controlling interest or the MI should be used. Now, while producing the CFS, the balance sheet of the subsidiary company should be adjusted for any current fair market value or the FMV of the assets. This is very important. While preparing in the consolidated financial statement, if the revenue of the parent company is the expense, writing for you, of the subsidiary, then in that scenario, it should be completely removed. Now I'm going to show you some of the examples on how CFS are prepared. This is the Colgate's consolidated statement of income. You can see all the data of all the subsidiary has to be combined. In the similar fashion, it is given over here for Colgate's balance sheet. As you can see over here, that was the statement of income statement. Then there is a balance sheet over here. Then I'm going to show you the cash flow statement of Colgate. Now you can see how this has been prepared. Everything has been restructured over here, and sorry, everything has been combined over here actually. So in and all, you can say that the consolidated financial statement depicts what a group of company is heading towards. So it gives a very clear picture of the not only the existing and the potential investor about the company and its future, but the CFS always doesn't help until you have the detailed approach, or you can say the detailed check. So you need to check the method notes in the CFS to investigate the transactions, understand why the entry has been recorded, and this will help you understand about the company very accurately. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.